Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. VP Nandkumar, MD and CEO at Manappuram Finance, joining in. Welcome to the show, Mr. Nandkumar, and it's a pleasure to speak to you after a long while. Overall, if you go to see with regards COVID-19, the pandemic has dealt a death blow to most companies. However, we do see tiny pockets, at least in the Indian market ecosystem, where a certain niche companies have managed to actually flourish and thrive despite the kind of impact that we've seen of the lockdown. For your company as well right now, if you talk about where Manappuram is concerned, it has been a dream run. Between March to June itself, we've seen revenues grow by 27%, profits have grown by 38%, when the entire thought was that from March to now, we could see major impact that could come in. And, it's impressive and quite unbelievable as well that there is some hope, at least in some sectors. What would your thoughts be on this?
Of course, for many companies, many industries, it was a death blow. So the stress is there in every sector, including financial sector. There is stress. But as you have rightly mentioned, the niche players have their own advantage. Being the pioneer in lending against gold, so we had a few of that those advantages in our working also to counter the negative impact of this COVID-19 pandemic situation. So one was early digitalization. Much before COVID, we started digitalization like a digital gold loan, online gold loan, whereby the customer is getting the facility of free locker like facility, that is free safe custody and liquidity anytime without actually paying for it.
Mm.
Because it is through a drawing power which can be used through any bank ATMs or using for merchandise also. So he can use that at any point of time. And only when he uses, for the days he uses, he need to pay for that.
Correct.
This advantage. And also various payment options for even for non-gold customers plus yeah, gold loan customers. Because during these days of close down, initial days in April and a larger part of May, what we have seen is these online transactions have increased
Mm.
so much. So all the days we have seen, including holidays, including a late night, we have seen transactions per day running into few hundreds of crores,
Mm.
200 crores, 300 crores, etc., etc. So that was one advantage. So few other things also we had initiated during the last 1 year. What through digitalization? One was the virtual office setup. That also we are using the mobility solutions through mobile. All our employees can work from anywhere. Yeah, so that access is there through virtual office. And also for training employees also, particularly when we fought a situation of, when we are fighting a situation of this pandemic, so the employees also will have to be taught about how to protect themselves, their families first, then about doing business, keeping social distance, etc. Lot of training and education for the employees and their families were highly essential. So these virtual classrooms that also to using mobility solutions, the service delivery is available through their mobile phones. So all these have helped us a lot. And coming to the product gold loan, yes, we have introduced, yeah, we have shortened the tenure of these products with lot of promotion for using that as like an overdraft facility through physical transaction. So much of rebate was introduced, up to 10% rebate, 12% rebate, etc., etc. With those sort of rebate, the customers were also induced to transact digitally 24 hours. So all these, yeah, has in fact was a real comfort as a niche player during this pandemic.
Right. And if we're talking of all of these positives as well, yes, I mean, and the major positive right now is almost 70% of your business could be attributed to gold loans. And that's actually the cash cow that's been turbocharging the company's performance. If you have to talk about the remainder 30% of the portfolio, if you could help us understand what was the negative impact of COVID on that portfolio, because gold business was flourishing.
Yeah. So around 28% of the portfolio is non-gold. Out of that, a major portion is microfinance.
Hmm.
The business are run through our 95% owned subsidiary called Ashirwad Microfinance. So see, even when the lockdown was there, there were many calls from these from many customers. Yes, we have money and we want to pay.
Hmm.
So we were not able to go there. We were not able to call the group meetings, center meetings for collections, etc., etc. But yeah, we immediately initiated offering various payment solutions,
Hmm.
various payment interfaces, and started training our employees. There also we have got around 7,000 employees. These employees also. So because of the quick initiation and digital and fast moving to a situation to fight this pandemic, we were able to collect, start collection for the willing customers even during the lockdown.
Hmm.
So last month our collections was around yes 76% was the collection in microfinance. Judging from the current trend, this month we might reach around 90%.
Hmm.
So, and one good thing about typical microfinance customers, where we have focused in rural and semi-urban areas, is the impact of this pandemic was seen less in these rural and semi-urban areas.
Hmm.
So the agriculture, because of the good monsoon start, etc., etc., the agri activities have started early, and also small constructions, etc., etc., were initiated in these areas. So because of that, the impact, even though was there throughout the world, but compared to the cities, the impact was seen less.
Hmm.
So we expect that the recovery to be normalized to around 95 plus percent in another couple of months' time. So the business is getting slowly back to the normalcy. And also for those customers, we are extending the loan. Those who wanted, only 25% of the customers really wanted any sort of extension. So without any restraint, we are extending the loan to these customers. Because one thing about they are conscious about is their bureau score,
Correct.
because yeah, they are aware, because they are not first time borrowers from AMFI. Most of them are repeat borrowers, three third cycle, fourth cycle, etc., etc., and borrowing from more than one MFI.
Hmm.
So they know the importance of the credit bureau score, and to ensure a sustained and increased borrowing ability. They made sure that they are not default.
Right. So with this, if you could just help us understand what portion of the gold loan portfolio where customers took moratorium initially, and by now, by how much has it gone down?
So gold loan, the initial requirement was only from 2-3% of customers only.
Hmm.
The reason is, our gold loan product, the contract tenure is only 3 months,
Hmm.
where the customer can renew these loans by paying interest and bringing that to the market level of LTV for any number of times. So
Hmm.
the average life of this loan is around 50 days now. So their burden in servicing that was very low. Because of that, the requirement for a moratorium was very low. Because those wanted moratorium, what they would think, because the gold price has gone up, and they can monetize this gold by selling it as a scrap, which will yeah, definitely fetch them around 95% of the value. So
Hmm.
typically for gold loan, there will not be any requirement for a moratorium. Rather, if they feel like they would yeah, better go and sell. So,
Right.
and coming yeah, after 6 months of this pandemic situation, we don't have any yeah, extended loan through moratorium in gold loan.
Right. And what about the moratorium with regards to where the MFI portfolio go? How has that been? What's the outlook there? Do you think there could be short-term pain in the MFI portfolio, on the end of the moratorium?
Yeah. So the moratorium seekers in that portfolio is around 25%.
Hmm.
Yeah. But having said that, I would say that many of these customers then come and pre-close it, even many of them asking for.
Hmm.
Because yeah, they want to avail another loan.
Correct.
Because now the availability is restricted to only two NBFC MFIs.
Hmm.
So yeah, there is a bit of yes, market competition where other, including other lending institutions, including banks, are also offering.
Hmm.
So many customers come and pre-close even after seeking moratorium.
Hmm.
Yeah. So I think ultimately the moratorium extension in another 1 or 2 months would be around 15%.
Hmm.
Yeah.
Okay.
Yeah.
So taking this into consideration now, with regards to a moratorium is concerned, another aspect is that the portion of online loans, as you mentioned, in the total gold loan portfolio has increased as well. In fact, in the month of March, if I'm not mistaken, it stood at around 45 to 50 odd percent. It's already gone up to a little over 60% now. Uh, do you think it will further go up in terms of people availing loans on the digital platform? And if yes, what are the kind of benefits that we see on the financials? I mean, do we see a increased margin profile, or I mean, any cost benefits that do come in with it?
Yes, it will increase. It is, even though not in percentage terms, yeah,
Mm,
it is sustained at over 60%. But now we are able to acquire a good number of customers. Even in that customers, that category also, there is an equal percentage of customers opting for that. So the requirement, the demand for online gold loan is ever increasing only. So the answering the second part of the question, the cost benefit, the cost advantage we have is definitely for a larger volume, even for the handling a larger volume. Say our average volume today is around 5 crores per branch.
mm,
Even if it is 15 crores, yes, but there is no need of any additional investment there, including recurring costs like manpower. With the same manpower, we'll be able to earn it.
mm.
So it has created a lot of capacity there. But as of now, the capacity utilization per branch has come down. So
Okay.
as such, there may not be an immediate cost advantage. But going forward, yes, it is going to definitely increase the ROA.
Hmm.
Yeah.
Okay. And overall as well, again, I mean, technology, IT is something which is driving your business growth as well. And
Yeah.
across categories, like you have been leveraging technology to improve the entire business cycle, say from customer acquisition to expansion, engagement, as well as retention. Taking this into consideration, do you think over a longer period of time, the employee cost is something which would not increase substantially, even if there is higher growth?
Yeah. So we are targeting a business growth of around yeah, a consolidated level of around 20% growth. For this 20% growth, I don't think for the additional next 4 5 years we need to recruit additional manpower. So with the same manpower, we'll be able to double our business in a matter of 5 years. This is what we believe. So it is possible because particularly in that new age technologies like the robotic process automation,
Hmm.
then IoT, yeah, then for digital learning, what we use is our own mobile through various mobility solutions. So all these, this technology in general, but particularly the new age technologies are of a big help in containing the cost and bringing down the cost impact. Cost to income and cost to AUM will be consistently down.
Right. Mr. Nandkumar, I was reading, one of these reports a couple of weeks ago, which was indicating that with all the technological initiatives that we've taken, probably over the next 4 to 5 years, we will be a cost save of almost 40%. If that's a number, if we are looking at, then what's the kind of bottom line growth are we anticipating over the next 4 to 5 years?
So yeah, we are targeting a higher bottom line growth than the top line.
Correct.
Yeah. So see the higher. I can only say higher bottom line growth. The reason is, yeah, in an environment of competition, the major beneficiary will be the consumer. So we may pass on many of these sizable portion of this business, this new environment, virtual environment to the customers. So this ensures a sustained level of ROE of over 20% plus a 20% growth also, CAGR. That is what that's what we yeah, plan about. That
Right.
is what is projected.
Right. And overall, if we take into consideration what's happening with gold prices as well, I
Hmm.
mean, it's taken a different run altogether. There is some bit of consolidation that is happening right now. But, the kind of thought that a layman has is that usually when gold prices are going high, that would probably translate into higher gold loan demand. And however, that usually is not the case when we talk to businesses like yours. Earlier, you had given us a guidance of almost 10 to 18%
Yeah.
with regards to FY21. Do you think we will be able to maintain that, or will it come down due to, I
Yeah.
mean, because right now borrowing has increased, but once
Yeah.
the impact of COVID is over, do you think borrowing on gold will go down slightly?
No, we are maintaining the same. And judging from the current trend also,
Hmm.
we'll be able to achieve that comfortably with our projected growth. So this, yeah, as the other loans are not that easy nowadays
Hmm.
than the pre-COVID days, the demand should have gone up. But yeah, there is a deceleration in the demand also.
Hmm.
So with that, yeah, on the one side, it would have been positive for the business. On the other side, overall the demand is lower. So both the positive and negative got neutralized. So the demand is like any other year,
Hmm.
as far as gold loan is concerned. So we may be able to achieve our targeted growth even no, without much difficulty.
Right. And taking that into consideration, if you're talking of gold prices, which are almost at all-time high, do you think it could impact the net margin and EPS as well on the gold loan portfolio?
It will not be because you see, our average LTV now is much below 60%, well
Hmm.
below 60%. See, when we say the loan to value, the value here is only the value of the gold metal.
Hmm.
And for a jewelry, not only gold is there, other precious stones are there, making charges are there, then GST is there. All these are completely excluded. For a customer, what he gets is the around 40-45% of the purchase value.
Hmm.
That is what he has taken.
Correct.
So he cannot afford to lose. For our you see, we are continuously maintaining the NPA level of 0.5%.
Hmm.
It doesn't exceed. Because of that, yeah, we have managed the prices well. The other part is will it reduce demand? Absolutely no. The reason is the customer is very careful about borrowing against his jewelry, unlike other loans, because the jewelry belongs to the females, the women in the household. So for them, there is a lot of emotional connect to the ornament.
Hmm.
So when they part with for pledge, etc., etc., yeah, they always demand that to be redeemed at the earliest. So because of all these, yeah, our accrued interest is only 1.5 months interest. So the reason what I'm saying is even when a higher LTV is available, the people will not use it. They borrow as per their cash requirement only. Is in their subconscious mind, they are always worried about their cash flow when they borrow against jewelry. So they will not borrow like that.
But
So it need not push the gold loan.
right. And if we're talking about the non-gold portfolio right now, when do you expect the MFI book? When do you expect the vehicle finance business to come back to normalcy? Because earlier as well, when we've had a conversation, the thought has been that over a slightly longer period of time, you would want to increase the non-gold business to nearly 50% of your revenues. Now, taking the current pandemic situation into consideration, we do understand that that probably will not be a near-term possibility right now. So, what is the outlook and strategy on that front? And when do you see normalcy there?
So I hope the pandemic will not last more than another 6 months time.
Hmm,
Because we all expect the vaccines to be
correct.
in place, etc., etc. So even though we expect 6 to 9 months to get the fear out of the people to move out, go out, etc., and the conditions are coming back to the normal, the situation. So then, of course, yeah, what I see, there will be a good demand for non-gold products also.
Hmm,
And the question about coming back to the normalcy, etc., etc., it was not only the pandemic, but also the major challenge was the lockdown,
hmm,
where the entire traffic is blocked, everything movement is blocked, everything was blocked. Now, even though the pandemic, this COVID infection remains as acute as a few weeks back, there is yeah, it is not going down. But the thing is, with the unlock 1, 2, 3, 4, etc., etc.,
hmm,
the transportation and many of these things are coming back to almost normalcy. So
Correct.
with that, the activities also have started, and people, particularly in rural and semi-urban areas, have learned how to live side by side with this COVID infection. So, because of all these and good monsoon agriculture, etc., I think in another 6 months' time, MFI business will come back to near normalcy.
Right.
So, yeah, no, it will be a normal, which will be somewhat near normalcy.
Right.
So, about vehicle finance, if you take is yeah, our collections during this month would cross around 95%.
Hmm.
So, as I have said, in another, as per my expectation, in another 6 to 9 months, things will be completely back but to normal, and there will be an increased demand overall,
Right. So,
which will help that portfolio also to come back to normalcy in another 18 months time.
right. So, do you think we will be able to achieve 50% of the revenues from the non-gold portfolio, say in the next 18 to 24 months?
No, may not be. So
Okay.
it may take another 5 to 8 years.
Okay. Okay.
Yeah, yeah.
Right. And then with that, recently we know that the RBI also allowed banks to lend up to 90% against gold. What is your thought on that front?
So yeah, yeah. So the situation now is NBFC customers who are more vulnerable than the bank customers.
Correct.
They are denied of this higher LTV. Whatever was the objective of the
Mm.
regulators, that was denied to the our customers. That was not good. The other thing, as far as we are concerned, yeah, our average LTV now is below 60%. So because of that, there is enough headroom there itself to borrow up to 15%. So, business-wise, I don't think there is an immediate threat, and this is also for a shorter period. RBI has said till the end of this fiscal year. So, and many of the banks also, this 90% LTV, almost all the banks are not using that. The
Mm.
maximum what I have seen is some of these banks have gone up to 80%.
Mm.
Yeah,
Okay. And
yeah.
with this, the traditional banks are offering gold loans at 15%. Manappuram, if I'm not mistaken, is in the range of 20 to 25%. What does this really mean for a company like yours?
Mm. So, see, why we have to borrow, no, we have to lend at a higher rate, whereas, yes, uh, see, some of these things, many of these things are not common, whereas the banks charge some appraisal charges, etc., and other charges. We don't charge anything.
Like,
Yeah. So the actual cost from a bank could be around yeah for a non-agri portfolio could be around 16-17%.
hmm, hmm,
Whereas yeah, ours would be, yes, as you have rightly said, maybe around 24%. That's the so what has necessitated the NBFCs? Our borrowing cost and banks' borrowing cost, it is highly dissimilar. Ours is very high. So that is the reason. The second thing about the business, as far as the customer is concerned,
hmm.
our type of customers who are also bankable will come to only to us. The one reason is our average ticket size is around 40,000 rupees,
Hmm.
and the average tenure of the loan is around 50 days. These customers, yeah, if they go to the bank, he has to, yeah, who are borrowing for a shorter duration, he has to spare that full day And also for redemption, which may take place in 1 month, 2 months time, he has to spare a day for that also. If we compare the wage in Kerala, etc., he loses around 1,500 rupees and 2,000 rupees. Say cost of yeah, for going these 2 days for going to these banks. So the customers understand this better. They always look at this. Our counters are open at around 8:30. They can leave the counter in 15 minutes. They need not spare his day for pledging, even for redemption. And what happens within 1 month of pledge itself, we have seen around 20% of the customers ready. So our target audience, what is most important is for him is a quick turnaround time. And being small ticket, the impact is less.
Right.
Yeah, so they come to us. So the interest rate alone is not the deciding factor here for a short term. And also the online digital gold loan, etc., with all these facilities, yes, the customers, our customers come to us, and bank customers who are borrowing a larger ticket for a longer time, they go to the bank.
Right. And very lastly, Mr. Nandkumar, with regards to fundraising as well, you've already done an approval of almost around 100 odd crores with regards to NCDs. However, how has the cost of borrowing structure changed for a NBFC right now, taking into consideration the interest rate scenario? And number two, uh, how much more are we looking to raise in the next 2 to 3 months?
Our requirement could be yeah, around around 15% of to consolidated this year, maybe this year's growth may be around 15%.
Hmm.
That liquidity is also already with us.
Okay.
Yeah, because in a pandemic situation, we have turned extra cautious and reserved that money. So we may not require any additional fundraising this year. And next year also we may require another 15 the 20% of the borrowing may be required. Which will be which can be met without any difficulty. The reason is we have diversified our portfolio. We are borrowing through dollar bonds. We are borrowing through various instruments also, and the money is available now through CP. We are able to raise at 3.75%, etc.
Right. And are you seeing the trend with regards to cost of funds reducing further?
We are going, yes, we are seeing that, it is cooling down around 10, 15 bits will be down during this quarter.
Right. So that's something which will be beneficial
Yeah,
as well to the company. Right. So I think that's something, we are looking forward to as well because the business is flourishing. At least there are some sectors and some segments of the ecosystem which are seeing positive growth,
yeah.
and that is spreading positivity around as well. But thank you, Mr. Nandkumar, so much
Thank
for
you.
joining
Thank
us
you.
on the show.
Thank
It
you.
was a pleasure speaking to you. I hope you enjoyed the conversation as well. And we will see you soon. Stay safe.
Thank you. Same to you. Thank you.